So we're going to get started once again with the dollar Canada. If you guys remember last week's video, this was the head and shoulders pattern that we looked at, the head and shoulders top. Just to give a little recap. We looked at the left shoulder, the head, the right shoulder right here, and what we had was a break of the neckline right here on the daily, and we were looking for a retest and a continuation down. Well, first of all, tap yourself on the back if you took advantage of this trading opportunity because it worked like a charm. And we're approaching the secondary target opportunity, right? We drew our Fibonacci retracement on, extension from our swing high to swing low. We talked about a 127 for target 1, a 1618 for target 2, and then also lining that up with a potential AB equals CD pattern. Now we're looking for the opposite, right? So something you'll hear me say on this channel a lot, if you're familiar with my trading style, is there's no such thing as bullish analysis or bearish analysis. There's just analysis, and the bullish or bearish nature of it all depends on what we predict the market to do. And one of the best techniques for not only finding entries for trades, but exits for trades is to think like the other trader. So if I am in a bearish trade right here, I'm thinking like the other trader. Where are the bulls? If I were doing analysis on where to buy, where would I likely get involved at? And vice versa, right? If I'm a buyer and I'm looking for where's the next place to get involved at, I'm really doing reverse analysis and saying, hey, where are these head and shoulder traders looking to get out? And you can see we're right around that area. So we have this level right here. Again, we have a zone between our 1618 Fibonacci extension, our AB equals CD pattern, and our VS1 level in here. If we bring on our volume profile, we'll see we're at the next volume spike as well. So let's drag it from our swing low to our swing high here, right? You can see our next little clusters right here, followed by a little one beneath it. And if we go down to the lower time frame, you're going to see that we're starting to lose momentum, right? Price action has put in a very aggressive move down, and you can see the slope has, oops, sorry, wrong button here. You can see that the slope has started to reduce right as we come into that previous level of structure looking left. So what was a very nice bearish opportunity last week, in my opinion, has run out of steam, and now you should be looking for periods of relief. So periods to take advantage of this falling channel and look for an opportunity for retracement back up to 134s. So next up is going to be the pound New Zealand here on the daily chart. And this is going to be a very similar opportunity to the dollar Canada we just looked at, which is why I wanted to follow up with this. And it's actually, in a way, a little bit ahead of it. So we've already seen the head and shoulders pattern, right? Left shoulder, head, right shoulder. We had a beautiful break of the neckline, look left, structure leaves clues, nice base, right? Previous level of resistance right here at our VS1 level. And then we broke this level, extended to the level that we expected to, and then we started to see that little bit of relief. And this is the same relief that we're expecting with the dollar Canada. Now, in this relief, we've actually formed another classic pattern formation. This is going to be called a bear flag, right? This impulse leg down, so this swing high to swing low, is going to be known as the flag pole. And this consolidation, this upward sloping consolidation right here, is going to be the actual flag. And if we go down to the 4-hour chart here, one time frame lower, you'll see kind of the shiftiness of going up and down of this flag pattern. So traditionally, what you would expect from this flag pattern is a break to the downside. Again, the market has a high momentum bearish move. We have a little bit of relief caused by profit taking from the previous bears, caused by new bulls entering the market, right? Either way you look at it, a slowing and selling pressure, kind of buying pressure taking over. But usually it is short-lived, and then we see a continued move down. Now, there are many ways to trade and place targets off of the flag pattern. I don't personally use any of the kind of traditional ways. I use the same method I brought to you before, think like the other trader. So in this case, I'm going to bring on a Fibonacci extension for my swing high to swing low. Look left, see if any of these numbers play out. 1618 is going to be a little bit too far. You can see the 127 is going to be at a nice level right at our previous level of structure right here, kind of the top of this bigger VS1, which is sort of irrelevant, but our previous inside VS1 levels. I can also take an AB equals CD pattern just to show you some different methods. That's going to be a little bit too long. Let's assume that this is the high of the flag. Again, we have nice confluence with the 1618 Fibonacci extension, but from a structural perspective, there's just not much down here. So for me, I would like the 127. For you guys that are kind of familiar with this technique, we can do an inversion as well. We may have to adjust this depending on where the flag completes at, but doing a Fibonacci extension backwards, and we'll get 1618 Fibonacci inversion confluence with that 127. A lot of fancy numbers and stuff, just technical tools at the same place. That's what we're looking for. We're looking for confirmation at the same location of different things. But I think that 127 extension, or a little bit above that, right in this consolidative area, could be a nice place to look for targets for this potential selling opportunity. All right, so next up, we're going to take a look at dollar Swiss, and wow, a little bit of a bearish move over the last few days, last week or so, I guess you can say. But again, we've been in some crazy fundamental times in the market over the past few weeks. Interest rate decisions, we got big inflation news came out this week. We've had elections. There is a lot going on. Now, I try not to dig into the fundamentals too much on this channel. I like keeping these videos kind of short and sweet and putting an emphasis on the technicals. That's what matters to me most personally. But if you are someone that wants to know and learn more about the fundamental side of the market, make sure you attend next week's, or I guess this week's, Truth About Trading Online free workshop, right? Starting November 14th, we're going to bring in a special guest who is a fundamental expert, and he's going to take us around, talk about the lay of the land, what's affecting the market, how it's affecting the market, what you need to pay attention to now in the present and also in the future moving forward, as it may affect the markets in a big way. So head over to www.tier1trading.com, sign up, 4-day free online trading workshop. Even if you can't make it live, which is recommended, make sure you register. That way we can send you the link and you can catch the recordings after each day's session. But here in the dollar Swiss is going to be pretty simple, right? This may be the quickest analysis I've ever done. Price action has dove down into a previous VS1 level. That's that green box, a previous level of structure support. Look for relief, right? Either two things are going to happen. We're going to see regained strength on the open, and we're going to blast right through, which will set up another trading opportunity to the downside, or we're going to see a little bit of profit taking. Going off of the theme of today's video, I guess, think like the other trader. I want you to put yourself in the shoes, the seat, I guess, of a trader who got involved up here, right? If you were bearish up there, what are you probably thinking at this level, right? This is the most recent major structure low on your chart. Would you be thinking of taking a little bit of profit? Would you be thinking of kind of rewarding yourself for a job well done? Probably. Not everyone, but at least some people are. Put yourself in the seat, put your shoes on the seat, right? Put yourself in the seat of someone who is looking to buy, a counter trend trader, right? And we've dove down into our most recent level of major structure. Is this a place where you think there may be some buying interest? Yes, right? So we're looking for these levels of imbalance where the selling interest may be fading, the buying interest may be increasing, and those are going to be awesome opportunities to get into the market. Again, I'm not saying we're looking for full reversals. You're not looking for a move from here all the way up here, right? People who think that's what counter trading is wrong, right? As a counter trend trader, you're looking for short periods of relief. How can I get in, sneak my hand in the cookie jar, take some cookies, and get out before mama catches me? And this is a potentially awesome opportunity here on the dollar Swiss at this current level of 94 cents. So next we're going to take a look at gold. We have an advanced pattern formation setting up. We actually have two. And the interesting thing, right, I've been trading patterns for a long time. And as you can see, it were advanced patterns, harmonic patterns, Fibonacci patterns, whatever you want to call it, for a long time. And they kind of get a bad rap inside the trading space for reasons I don't know why, right? People tend to yell at you for things they don't understand. But one thing people assume is that patterns only work in a single market, right? Because I mainly focus on Forex, they only work in the Forex market. They don't work on commodities. They don't work in the stock market. And that's not true. Each asset class has its own personality. And it's not as much as the asset class that makes them work or not work. It's the type of movement that you get. We call it the personality of the market. And gold has a pretty good personality. And just to give you some idea of what we've seen just, in the last, whatever's on my chart here, we've seen a few advanced patterns form, right? We had a nice little Gartley, a deep one here, X to A to B, B to C, C to D down there. We had a nice little cipher right here, X to A to B, B to C, C to D, right up there. We got a failed bat pattern right up here, right? So I'm not going to show you all winners. I can care less about that. But I just want to show you the fact that these things form, right? X to A to B, B to C, C to D. You can even make the case. I think I see one more. I'm usually good with my eyes, but we had one more right here. And yeah, look at this. We had a nice little Gartley here. X to A to B, B to C, and C to D. So you can see these things are actually pretty prevalent in the market. And we have two setting up here, which is going to be a somewhat confusing opportunity, but I want to bring it up because it's a perfect follow-up on the conversation that we had this week in the live room about what do you do with multiple pattern opportunities. So I'll draw the first one. The first one is going to be a bat pattern, right? My X leg is going to start. Where's my new favorite friend, my circle friend? My X leg is going to start right here for my bat pattern. And I'm going to shortcut it for time purposes, right? If you guys have been on the channel, you know how we draw these things already. If not, just go back and watch the videos. But we're looking at an X to A, our starting point, A to B being our first retracement. We refuse to touch the 618, so we know we're on bat pattern alert. B to C right down here, and then a CD, our completion point is at our 886, and our completion zone is going to be to the X leg, so the high of our pattern. So this area right here is where you're looking for your bearish move. Now, if we go one bit higher, right, and I just bring out my new favorite toy. I like circles for some reason. I don't know why. Just don't judge me, right? And we look right here. This could be the start of a potential cipher pattern, right? Again, I'll kind of go through this quickly as not to waste your time, but we're looking at a cipher pattern that looks like this. X to A, swing high to swing low, A to B, right there. Let's make it a different color. Yellow works for me. B to C down here, and then a CD completion right at our 786 with our completion zone for the cipher being right here. And again, we're talking trade plan development this week, and the talk about what do you do when you have multiple patterns overlapping. And a lot of it will depend on where you're located and the rules of your broker. There are different rules depending on what part of the world you're in, and how many positions you can have on at once. But the fact of the matter is you need to have a rule, whether it's I judge one pattern over the other, whether it's I always take the first one versus I always take the bigger one, right? We had that back and forth. You know, I always take the first one because a completed pattern is, I never want to pass on a completed pattern in hopes of a potential pattern. But we had a trader in the live room say, hey, I'm the opposite, right? I like the bigger pattern because it seems like the bigger one is always hit. And we talked about, hey, there's a perfect way to figure out if that's a good rule or not. Test it, track the data, analyze the data, and it'll tell you everything you need to know. And as traders, these are the type of discussions that we want to have. We just don't want to take action because it feels good or because our heart says so or our brain is telling us to, right? This is a business. We need to do market research, right? Just like a fast food company would do research on their demographics before opening a store and trying to figure out what the traffic's like on this particular location. We need to do the same thing with our trading, right? These patterns, these head and shoulders, these flags, this indicator, right? These are our businesses. These are our franchises, and we need to put in a massive amount of research to make sure that if we're going to invest the time and the money into them, that they're going to deliver us profit. And that's the difference between thinking like a professional and just treating trading like a hobby. So if you like that, we're going to talk a lot more about it in this week's workshop. Again, I hate shamelessly promoting this thing because I'm not really a big promo guy, but every time we do it, I get people that are late. I get people that say, oh, I missed it, Akil. Can I have access to it? I'm like, well, it's a live workshop. I mean, the recordings are online, but we only keep them up for a limited amount of time. So I'm sorry. So I just want to give you guys every opportunity to sign up. And also, so I don't personally feel any regret if someone misses it. So sign up, Truth About Trading Workshop starting Monday, www.tier1trading.com. I'll see you there. Do me a favor, if you're new to the channel, you're not subscribed already, make sure you hit that subscribe button. That way you don't miss any announcements about future events. And if you are subscribed, thank you for the support. It means so much. Do me a favor, hit that like button if you want to leave a nice comment below, or if you have any questions, feel free to do so. I read each and every one because I do value your time and I do value your support. All right, until next time, plan your trade, trade your plan. Akil, out.